market summary for beginning of August. Who wants to take a stab at the active listings beginning of the month? So you were the closest, 13,746, which is nuts to think about because we've been used to 18 to 19. And remember, a healthy market's like 30. If you're looking at this 13.7, that's down 12% from 15.7 last year, and it's down 11% from 15.4 last month. So we were at 15.4 last month, and we're at 13.7 this month. So we just jumped right past the 14,000s. And if you look at month supply, 13.7 divided by 9,300, we're less than 1.5 months of supply. So for the report, Michael Orr basically says the market is hot, becoming very imbalanced in favor of sellers. Demand recovered suddenly during the second quarter and stabilized at a level significantly above normal. So we're no longer at a below normal demand, we're at above normal demand. The last 2 months have seen supply drop sharply from its already low levels, so we now have a wholly inadequate number of homes for sale to keep the market functioning normally, which, like we said, we're less than a month and a half of supply. That's active listings. Pending listings, we're at 6,500 versus 5,600 last year, so we're up 14%. And up 0.6% from 6,600 last month. Monthly sales were at 9,300 versus 9,500 last year, so we're up 9% year over year, which we weren't sure, was going to continue, right? Looking at that trend, what was going to happen. Monthly average sales price is $170 a square foot, up 6% from $161 last year. So we're seeing pretty consistent this 6% number. And median sales price $280 versus $265 last year, so that's up almost 6%. And up 0.9% from 279 last month. And if you guys remember, each month we've been setting a new record. So 2 months ago, 278 was the new record. Last month, 279 was the new record. This month, 280 is the new record for the median sales price. Last month, we noted the unusual drop in active listings, which fell to 4.1% below the 2018 level of July 1st. On August 1st, this gap has expanded to a startling 12%. And much of the decline was due to the low number of listings activated. 8,200 homes were activated last month, and that's the lowest number for July that we've seen since they started keeping records. Dollar volume for July was $3.2 billion. That's the highest total for any July in history. Pricing showing no excitement whatsoever, behaving as if the market was normal. This cannot last. And what he's saying is like the appreciation isn't crazy, right? We've been experiencing crazy appreciation and we've leveled out. So it's crazy that we've leveled out. But this, having less than a month and a half supply, that just something's got to give. Remembering sales pricing is a trailing indicator, often as much as 12 months behind the leading indicators. We expect to see fireworks in pricing over the next 12 months. In fact, the current situation reminds us of 2004. Big difference in 2004 is that we're seeing large price increases, significant number of homes being bought for resale by speculative investors and remain empty. Finally, he says these are very interesting times, unlike the past 5 years, which were stable and predictable.